Hi everyone, welcome to my channel. I'm Yvonne Lai, a property consultant and investor myself, and having 9 years of real estate experience. I've always been a facts and figures person and I love numbers crunching. After much encouragement from my clients and agents, I'm finally coming out of my shell to share with you my thoughts openly. So, without further ado, let's get into the topic. Today, we are diving into the review of one of the hottest launch in Tampines, Parktown Residences. In this review, I'll be walking with you through the features, location, investment potential, and giving you my honest opinion on whether is it worth buying and paying a premium for an integrated development. And there's a bonus segment which is comparing the growth of condos and ECs when they are side by side. Parktown Residences is the first integrated development in Tampines with covered plaza to both the retail, community club, hawker centre and bus interchange and Tampines North MRT. The fun fact is there are 20 developments in Singapore and currently there are only 2 in the east, which is Bedok Residences and Pasir Ris 8. So Parktown is also surrounded by MOP BTOs, which is what I like because this means that your HDB upgrader potential is there. It has a site area of 545,000 square feet and consists of 12 blocks from 1+30 to 5 bedrooms. There will be a total of 1,193 units. Very exciting because it's finally a launch over 1,000 units. The TOP is in June 2030. So it's jointly developed by Capital Land, UOL and Singapore Land Group. And I'm sure you have heard of these big developers. And Capital Land has developed some iconic developments like One Per Bank, Interlace and Deleden. And of course, we also know that Capital Land is a dominant player in the retail space, which is also why I like Parktown, as you know that the retail mall will be very well managed and you won't have those japalang tenants that will spoil the vibes of the whole place. So this is important for capital appreciation. Not much information is released now, but I think this development will look very iconic just by looking at the landscape drawing by the developers. Given the area's connectivity with the Cross Island Line and with Tampines North, Pasir Ris and Changi set up to welcome more jobs in the semiconductor and aviation industries, Parktown could be really a solid potential investment for those looking to enter the market, if the condo is priced correctly. Alright, now let's dive into the finances to see whether it's Parktown worth buying based on my guesstimation of its price. Firstly, let me go through the area analysis with you to understand how the prices of the developments has been growing. Other than Pasir Ris 8, there's no direct comparison. So in this area, there's a mix of EC, which are Tampines Trillion and City Life and Tenant, and the rest of them are leasehold condos. The maximum PSF of these condos has gone up to 1,006 PSF, which is very healthy, with Pasir Ris 8 crossing 2,001 PSF mark. So the question is Parktown going to be more than 2,001? My take, definitely yes. Let's use Pasir Ris 8 as a case study. The land is sold for 684 per plot ratio and the break-even price is 1,232 per square foot per plot ratio. The developer selling price ranges from 1,004 to 2,001 with an average of 1,006 PSF. Counting the margins, the developer's profit margin is about 35 to 40% margins. Using this as a guesstimate for Parktown's launch price, the land was sold at 884.6 per square foot per plot ratio with a break-even of 1,661 per square foot per plot ratio. Using the same formula as reference for the next integrated development, here's my guesstimate that it will launch from 2001 and upwards. My average, I'm guessing about 2003 to 2004 PSF, and I guess the price range to be within this. These are just my estimations, these are not the actual prices by developer, so please do not take my word for it, it's just my research that I've done. So the question is it worth paying a premium for an integrated development and potentially being the most expensive condo here in the next couple of years? Let us first take a look at how the developments within the vicinity perform over the years. As you can see from 2010 until now, the prices are trending upwards for both the condos and the ECs. And the highest price being Pasir Ris 8, which was 85% sold out on launch day in 2021. If you still remember, the developer increased 6 times throughout the day. It was crazy and I'm expecting Parktown to be equally mad. So this is super exciting because the Easties, you have finally something to look forward to. So I would still say that yes, it is a project that is worth looking at. depending on the price. Next point, looking at the URA master plan, you can also see that there are more residential plots coming up surrounding Parktown. Unfortunately, we do not know whether it's going to be HDB or condos, but for sure, the land will not be cheap. Okay, something more predictable happening soon to support the prices in Tampines would be the upcoming mixed development site at Tampines Street 94. This was sold at 1,004 per square feet per plot ratio, which is already more expensive than Parktown's land. More plots are upcoming at Street 95, with one confirmed site for EC and the other one we are still not sure. So overall, my answer to this question is yes, it's worth paying a premium for an integrated development. You pay more now, but 3 years down the road, I'm sure you'll find this place cheap. Some additional research that I did here was, is it safe to buy into an integrated development which is selling at a much higher price compared to the neighbouring EC? Here, I compared two areas where there's an integrated development and an EC side by side. The first area would be Punggol area where we have Watertown, that's above Waterway Point, and Privé EC. So from the chart, you can see that both developments have the same price trend. They increase and they decrease at the same time, but the clear winner here is Privé EC, increasing at a faster rate of 106% since day one comparing to Watertown. Next, let's take a look at the Buangkok area where we have Sengkang Grand Residences and Esperina Residences, which is an EC. Sengkang Grand being the newer development increased a total of 16% from launch day. Within the same time frame, Esperina EC has outdone Sengkang Grand with an increase of 46% from 2019 to 2024, despite being 9 years older. So my final thoughts, in summary, is Parktown worth buying? My answer is still yes, but it really all depends on pricing. If you're not eligible for an EC, you have no choice but to consider Parktown Residences if you're an East Side lover. However, the headache comes if you're eligible for both. Then which one should you choose? Take a look at my next video. Also, even if you can afford Parktown, at the end of the day, it all boils down to the launch price, and importantly, I cannot emphasize enough, it is the unit selection. It doesn't mean that pool facing or higher floor is always better because they usually have a premium price tag. So personally, I have clients making less when they buy this kind of premium stacks. And developer also price the different stacks differently, so I will take note of all of these things and compare the prices when the price is being released. Alright, so I hope you enjoyed this video. If you would like to find out more on your personal situation, please feel free to reach out to me so that I can give you a personalized advice. And if you find this review helpful, don't forget to like and comment below with your thoughts on Parktown Residences. Would you consider living here, or do you have any other condo recommendations? Let me know. Bye!